Welcome again for today's second session on accounting packages. Yesterday on our first session we defined what are the accounting packages, and we saw the softwares used in accounting packages. And at the end of our first session, we said that today our second session, we are going to begin looking on the first software, that is QuickBooks. We said we have QuickBooks, Sage, Tally, but we said we will merge on QuickBooks and Sage. Now, I want us to go straight to QuickBooks. We define what is QuickBooks. We also define what it does, be able to know what it does and where is it being used, and what are the reports that are being generated from QuickBooks. Now, I want us to begin with the definition. QuickBooks is an accounting software. QuickBooks is an accounting software whose products provide desktop and online accounting applications, as well as cloud-based ones, which can process bills and business payments. In other words, we are saying QuickBooks is an accounting software that produces a cloud-based accounts. When we talk about cloud-based, meaning this one produces bills, produces business payments. In other words, it is able to generate any information, any transaction, any report that you might need on your business. Now, what does QuickBooks? It targets on medium and small businesses. Majorly, most people, the small businesses, companies, and medium, they normally use these QuickBooks in tracking their businesses. Now, having seen the meaning of QuickBooks, I want us to see what it does. Number one, to manage invoices. QuickBooks is used to manage invoices. It is used to manage invoices. You can create invoices easily and either print them or email them to customers. I'm going to demonstrate when you create an invoice how you're going to print from your desktop or from your laptop, and how you are going also to send them, email them direct to your customers. In fact, if you don't need much of paperwork, you can email them direct, because once you are connected with the internet, you can email them direct. But if you are not connected, you can print them and then maybe you send them to your customers. So it will create and track invoices, the invoices that you maybe you are preparing for your business. Now, you can fill the amount of your standing invoice, known as the accounting receivables, and as well as the days they are overdue, by running the accounting, what we call the aging report. In this one, under the invoices, will be able to know what are the invoices that you have. What are the due date for the invoices that you have issued, and when are they supposed to be paid? And on that one, there's a column called aging report. You click on the aging report, you'll be able to see the due dates for the invoices that you are issuing or you have issued. Another one is to pay the bills. It helps to track bills and expenses. Now, on the accounting packages, there is you can use different ways to track your bills or to track your expenses. So QuickBooks keeps track of your bills and expenses automatically by connecting your bank and credit card accounts to QuickBooks. So here, the easiest way is to connect. Once you create your QuickBooks, the account, you're able to create even the bank account. You connect them direct, so that when you are doing when you are reconciling the statements from the bank and your statements and the bank reconciliation, doing bank reconciliations, you're able to see how it matches with the QuickBooks. So you have to connect them. The information you have, it should be connected with the information in the bank. The goodness with the QuickBooks, you can open even if your business has more than 5 banks or more than one bank. You have KCB, you have Cooperative Bank, you have Equity, you have Smith Bank, you have what is this bank? ABSA Bank. So you can able to open those banks, and they can able to track expenses that are from these banks. So this is another way where QuickBooks helps us to pay the bills and manage them, and you can track them very well without any error, unless you record a wrong transaction. But generally, having the bank reconciliation, the bank statements, it is very easy for you to track the expenses on QuickBooks. Number 3, to track the cash flows. Yes, here the QuickBooks will help you to track your cash flow. The cash flow means your daily cash flow, monthly cash flow, and your end year cash flow. So it will help you to know how is your cash flow moving. Another one, it will help you to generate month/year financial reports. And these reports we are saying is the trial balance. The QuickBooks will help you to generate a trial balance. It will help you to generate an income statement. That is the income statement, generally known as profit and loss account, and the balance sheet, also known as the financial statements, the financial position of the company, and also the cash flow statements. You'll be able to know the inflows and the outflows of your business. So that is how it's going to help you. It will generate a report. But these reports are being generated according to the information you have given to QuickBooks. Bear in mind, if you give a wrong information to QuickBooks, it also gives you a wrong financial statement. Wrong. But they will balance. But wrongly balanced financial statement. So before you start any transaction, make sure the transaction you are entering in QuickBooks are correct, genuine, verified, and processed well. Let them be verified by anybody in your institution, maybe by the auditors or maybe by the financial managers. Let them be verified well and being estimated and recorded well, so that when you enter this QuickBooks, when you enter these transactions, they are accurate and genuine. And when you enter the transactions, make sure you feed in you debit the correct information. Every debit has got its credit. So make sure whatever you debit is correct and whatever you credit is correct. Because if you debit wrong and credit wrong, yes, at some circumstances the transaction may go through, but at the end of the transaction, the balancing will be wrong. So make sure these statements are generated well before any transaction is done into QuickBooks. That is garbage in, garbage out. If you give in a bad information, bad transaction or distorted the transactions to the system, it's going to generate bad distorted information to you. So make sure you you generate good transactions, verified transactions before you post them on QuickBooks. And so those are what we call, that is how it's going to track to give you, and you can also track this one by, you can also pay the payrolls. It also helps you to track the payroll of your employees in an organization, whereby you will be able to know the number of employees in an organization, then the salaries paid, and the deductions required for the employees. So make sure it is well recorded before you do any transaction. Now, having seen the definition of QuickBooks and what the QuickBooks does, now what we need is now to demonstrate from opening the accounts up to producing the statements in QuickBooks. See you at the next session, where we are going now to demonstrate on these QuickBooks practically how it is being used. Because words we can speak, but to demonstrate is also another elephant in the room. Thank you. See you on the next session. This has been Goddy Accounting Softwares, helping you to know the accounting packages and to how to use them. Kindly subscribe to our channels, like our channels, so that you can get more of these our videos. Thank you.